Hey guys, Rafi here from the End Game Investor, and today we're going to discuss Japan. You know, there's a lot of possible triggers to the endgame avalanche that is sure to come possibly in this new year, 2023. But ultimately, which domino falls first is an accident of history. The cause of the 2008 financial crisis wasn't the housing market. The housing market was just the trigger. And even if you zoom in and try to figure out what was going on at that time exactly behind closed doors of all the banks and real estate funds and whatever else was cracking up, you're sure to find a different trigger. And we don't want Keynesian academics rooting around for what they think happens to be a trigger of a catastrophe and saying, oh, that's the one thing we have to fix because we can keep printing money and blah, blah, blah forever and stealing from the middle class and wage earners as long as we plug up this little hole in the dam that we hew out by stealing from the public. Well, Keynesian economics is really an exercise in exactly how to steal for the longest possible time without anybody noticing. And I'm sick of that science.
So when you're criticizing me, you're actually criticizing the scientific facts.
And so what I'm saying is Japan is just another possible domino as to what will fall first, but ultimately the cause of it all, the cause of every credit collapse, the cause of every collapse of every empire, the cause of the collapse of human society, however it may be structured, is always theft. When there's too much theft, society cannot sustain itself. Inflation is just another form of theft through the monetary medium. And so the cause of the eventual collapse of this entire pyramid will not be housing, it will not be Japan, it will not be some central bank or other, it will not be some Pacific Island country that has a lot of banking deposits from tax evaders that suddenly falls. It will be the inflation of the money supply that happens everywhere together, because this is the first time in human history where the inflationary theft scheme has gone global, and it is about to collapse globally. So let's look at one of the dominoes. Could be the first to fall in an obvious sense, and that is Japan. An article from Bloomberg came out the other day, and by the other day, I mean that other day. I'm not sure which other day it was, but it was another day. And this chart showed up in that article, and it says BOJ is buying debt at record pace. BOJ's monthly bond purchases. Now you see here black lines in trillions of yen. And how much is a trillion yen? Who knows? It's a lot of money. These here are the black lines since 2013. This was the beginning of Abenomics when Shinzo Abe, that guy who got assassinated by that guy with the sawed-off shotgun, he began buying bonds in 2013. And you see here this purple line, little thin purple. Is it purple? I hope it's purple, because if it's not purple, I sound like an idiot.
It says purple stuff inside. Purple is a fruit. Purple.
18 trillion yen. Now, the question is, Japan, the Bank of Japan, just recently extended or expanded its yield curve control policy to have a ceiling of 0.5% or 50 basis points rather than 25 basis points. So if you're going to keep the ceiling higher, 25 basis points higher, 100% higher than it was beforehand, then you'd expect the money printing to slow down because you need less money printing to preserve a higher interest rate than before. But that's not what's happening. Why not? Because the market smells blood. When an animal is wounded, it gets more ferocious and it might get louder and more vicious, but it is bleeding, and so it attracts more attackers, and eventually it will be cornered and eaten. That is nature. That is also finance. That is the way of the world, and finance cannot escape the way of the world. And we see here evidence that the market is closing in on the Bank of Japan. See here the 10-year yen swap rates, which is a measure of how much people are willing to pay to swap for yen, which means they are anticipating a stronger yen, which means that they are anticipating the Bank of Japan to abandon its yield curve control policy. And as this line, the black line, separates from the other, I don't know what color that is, who cares, the 10-year benchmark Japanese bond yield line, that means that the market is anticipating a larger Bank of Japan move. And you see here this vertical line and the gray line, possibly it's gray, then it's moving from 25 basis points here. We've been hitting up against the ceiling of this 25 basis point yield curve control line from it looks like September 2021. And that is why eventually, and it just happened a few weeks ago, maybe last week, 2 weeks ago, whatever it was, moved up to 50 basis points of a yield curve control line. What happened to the 10-year yen swaps? They went up even faster. And so,
oh no, it's the Japanese!
the market is anticipating the abandonment of this Japanese monetary policy. And we're going to get into what this has to do with gold and silver in a second. Now, I configured this little few lines myself looking at the Bank of Japan balance sheet compared to the Japanese national debt in yen terms. So we have here on the first line, Bank of Japan owns 557 skrillion, 491 bladrillion, 291 quadrillion, 377,000, whatever that number is, doesn't matter. And the Japanese national debt, meaning total bonds outstanding, is 1 flagrillion, 280 skrillion, and 12 zeros. So the Bank of Japan owns about 43% of all Japanese government bonds.
Oh, and Dan, it looks like Japanese people are now rushing onto the field.
This is not the kind of thing you want happening during kickoff.
So who goes bankrupt when the level of those bonds, the yield of those bonds goes up and the value of those bonds goes down? That is the Bank of Japan itself, and therefore the yen itself. Now, if we were to return to the first chart for a second, or at least conceptually, the fact that the Bank of Japan has to buy way more bonds now in defending a higher yield target means that the market is converging on them, and it is only a matter of time. We've seen pegs break before, whether it is a currency peg, one currency to another currency, or a yield peg of a currency to a yield maximum, or whatever it is, they always break. I'm reminded of the Euro Swiss franc peg that was broken on January 12th, 2015, when the euro went from, or the Swiss franc went from 1.20 euros to 0.87 euros, or was it that the Swiss franc went that, whatever. It was the Swiss franc going up and the euro going down because the Swiss National Bank decided to stop its currency peg. And you see here a move of, I think it was like 28% in a few minutes. That is what is going to happen to the Bank of Japan and its yield curve control policy, because none of these pegs hold permanently. They always break. It is only a matter of time. And the first back down to 50 basis points from 25 basis points means that the attack has begun. And how do we know the attack is continuing? Because this article, this piece of an article from the FT, the Financial Times, quotes a bunch of sources around the Bank of Japan. Let's read these Japanese names. Naka Matsuzawa, a strategist at Nomura Securities, said the Bank of Japan's decision had exposed the contradictions in the normalization process. It was essentially raising rates and reinforcing quantitative easing at the same time. How is it possible that a central bank has to raise rates and print money in order to raise rates? That doesn't seem to make any sense. And as I said before, as they raise rates, more market forces converge on them to force them to raise it even higher, because the rate of inflation, the rate of price increases, the rate of depreciation of the yen is something like 4 to 5% now, and interest rates are 0.5%, which means that holders of yen are losing around 3 to 4% of their purchasing power a year by holding bonds. So it makes no sense that these bonds are still trading at this 0.5% yield cap, and the market is going to force them to abandon it. Continuing on this line, he said in a note that in a typical normalization process, markets expected to see an increase in the median 10-year yield target together with the greater flexibility for the monetary base target and a decrease in JGB buying. However, the BOJ decided to widen the trading band for 10-year yields give up on shrinking its balance sheet for now and keep down market volatility by actually increasing JGB buying. There's a good possibility that the market will attack these contradictions in the BOJ's approach, says Matsuzawa. As I just showed you with the Swiss franc euro peg break, there is a lot of money to be made in the breaking of a major peg. And the Swiss franc to euro peg was relatively minor compared to the yield curve peg of the Japanese yen at 50 basis points or 25 basis points or whatever it might be, because Japan is the most indebted country in the world when it comes to debt to GDP ratio. They are the kings of Keynesianism. And when this yield curve control breaks, it will be spectacular, much more spectacular than the Swiss franc euro peg of 2015. And so it doesn't cost a lot of money for a lot of market forces to join in and attack this wounded animal. And when it breaks, what is going to happen to the gold price? That is in the next chart. So we see here the yen, that's this wobbly thing. And there's not an exact correlation here, but you can see the short-term wiggles in the yen have generally traded together with the price of gold, because as the yen falls, the dollar rises and gold in dollar terms falls. But as the yen rises, the dollar falls and gold in dollar terms rises. So you see here during the beginning of the bull market for gold in 2016, end of 2015, beginning of 2016, the yen rose very strongly. And as the yen fell very strongly here from 2021 to 2022, gold has been stuck in a consolidation phase. And yes, generally gold increases because gold is the real money and yen is only a gold substitute. And we see here as the yen has risen, as this yield curve control policy has started to fall back and fall apart, then we've seen that gold has staged a significant rally from its bottom at 1618 ever since the yen started its rally here. So my point is that as the yen rallies, because this yield curve control policy is going to be scrapped, it's going to rally stronger. It's not even going to be a rally. It's going to be a break, just like we saw the break of the Swiss franc against the euro in 2015. It's going to be a spectacular break. Exactly what's going to trigger it, I don't know. Maybe something else. Maybe just suddenly in the middle of the night. We don't know. But when it does happen, the yen is going to strengthen in dollar terms. Doesn't mean it's going to strengthen much in purchasing power, but it's going to strengthen in dollar terms, and gold and silver are going to rocket. Is this going to be the trigger? I don't know. It's going to be a trigger, or it's going to be one of the dominoes in a row that falls. And when they do fall, it is important not to go back into history to try to determine exactly what it was that caused the fall of the monetary order and then try to sew that up for the next monetary order of theft. We just have to return to gold and silver and understand the entire system was based on theft in the first place. And it doesn't matter what the proximate cause was. The cause of the collapse of the monetary system was theft, as is the cause of all societal collapses. It's when law and order breaks down. And inflation is really a sin against law and order.
You're out of order. The whole freaking system is out of order.
Happy New Year, happy 2023, and I'm sure we're going to have quite a fun and exciting year. Hopefully, it will be the year of the end game, in the year that freedom is unleashed and governments around the world give up and fly to very expensive islands somewhere in the Pacific where they can live out the rest of their lives in debauchery and leave us the hell alone. This is Ralphie of the Endgame Investor. If you enjoyed this video, then please sign up for a 2-week free trial of the Endgame Investor, because I think the endgame is going to happen this year. And if you're not into that, then sign up to be my patron on Patreon, where you get a weekly video on biblical commentary around monetary and economic policy topics. The last thing we covered was Joseph, the silver stacker of Egypt.
Fighting wild.